The next area that we look at is tax planning. Taxes weave in and out of everything in our lives, from the day we're born to the day we die, basically. Income taxes. Are we paying too much? What deductions are not being taken? Too much withholding? Not enough? Gains, capital gains and losses. Should we take them now? Can we defer them? Things like that. Tax deferred versus tax-free accounts I spoke a little bit about, but how do we want to use them and how do we want to structure our taxation is another question. Where do they fit? What are their advantages and disadvantages? What's the tax impact of a major sale? Say we have a vacation home, for example, we want to sell. Well, what's going to be the tax impact of that sale? And how do we want to structure the sale to maximize the tax benefits of it? And that can get pretty tricky, but there's some laws on the books right now that make it much more appealing than it used to be. How about taxation during retirement? You know, people say, well, gee, I get to retirement, my tax bracket's going to be lower, right? Well, perhaps not. You know, perhaps not. And one of the things that we have to be prepared for is that taxes may not go down at all, tax rates. As a matter of fact, when you take money out of an IRA or a 401k or any withdrawal, it's not taxed based on the currently favorable capital gains tax rate. It's taxed as ordinary income. Whatever your tax bracket is, that's your tax rate. So if you have a high income, you can end up paying more by taking money out of a tax-deferred account as opposed to a taxable account. So when we want to use the taxable versus the tax-deferred accounts is part of the strategy. Then there's also possible estate taxation. It's all well and good to build up a whole pile of assets, and then we get to the end of our days, how much of a chunk is Uncle Sam going to take? There's ways to work with that so that we can reduce or even eliminate it entirely.